Hi folks, Robert Feol here, and doing a short video for you. This video is mainly for foreign investors that are considering buying investment property in the United States. And what I've done is I've compiled a little mini guide here of some tips and tricks and things that foreign investors should consider if they're looking at buying property in the current U.S. market, which is very, very low and very much at a discount. And those things are extremely attractive to investors. But I also wanted to make sure that people aren't making investments that they regret later on over time. So I call this a U.S. investment buying guide for non-U.S. residents: techniques, tips, tricks, pitfalls, warning signs, and a comprehensive checklist to making your first and subsequent successful investments in the current U.S. economy. So with that, let's get started. At this point in the United States economy, the credit collapse of 2008 really has done more to damage the U.S. economy since any event barring the Great Depression. Because of that, we've seen the U.S. dollar fall. The Federal Reserve's economic policies have continued to hyperinflate the currency, which continues to not only drive up prices of gold and silver, but makes the U.S. dollar so weak against other currencies. Foreign investors in Canada, investors in Australia, Singapore, the United Kingdom, they're able to buy properties from providers at a significant discount beyond the discounts already offered through getting and obtaining foreclosure property, simply because the exchange rate is so favorable for them. Now the issue is that when you add in dazzling photos that many promoters use, and make no mistake about it, this is about finding the right promoters and making sure that you are performing a litmus test, if you will, of the promoters who are simply middlemen and salesmen out to get a commission, as opposed to actual investors who enjoy helping other people obtain quality investment properties. When you take into account the dazzling photos and the amount of money that's being spent on marketing worldwide to encourage people to buy property in the United States, it really is no surprise that Forbes magazine reported that in 2011 alone, foreign nationals accounted for almost 1/10 of U.S. home sales. It's a really impressive statistic, and it tells you the degree and the gravity with which investors are coming to the United States. The major problem, in my opinion, as a full-time real estate investor and also an owner of a licensed real estate company that works with foreign investors, is the hype of international promoters to their non-U.S. client base. Now, I've seen a lot of companies promote properties in cities in the United States where there's no way I would live, I wouldn't visit, I certainly wouldn't own, and they're charging prices that are far above fair market value, while offering amazing returns, 20% plus returns, 25, 30% returns. I can't make this any clearer. When you see that, you have to really be wary, and you have to ask, where are those returns coming from? You have to obtain historical data to determine exactly how much of that is accurate. Is there truly a tenant in the house? What's their name and number? Can you interview them? Are there rent rolls with deposits? Things like that. A lot of these promoters, they put together these slick packages, and in these areas like, well, I'll give you an example. A lot of people are very, very excited about Detroit. Detroit is a city that's lost a lot of jobs. It's having a lot of issues with their infrastructure. They're razing city blocks, which means they're burning down blocks of vacant and abandoned homes. Now, most cities don't have this problem, but I've seen companies promote properties in Detroit where basically they're buying these properties for a song, 500, 1,000 US dollars, putting a nominal renovation in it and charging 70, 80,000 US dollars for it, while offering these 20, 25% returns. Those aren't realistic. You have to be very careful. They're extremely high risk. There's tons of counterparty risk there. And it's not because the yields aren't achievable. You certainly can get 20% in real estate, depending on how you structure properties, financing, etc., purchase price. But in these super high risk areas, you're going to have vandalism, high vacancy rates. That would eat up any return you have and probably make your return negative. And while these promoters are promoting beautiful packages and verbose promises, a lot of people, what I encourage people to ask is, do you own any properties in the area you're promoting? And the truth of the matter is, most likely, very few own any of the real estate they promote. And that, for me, is a litmus test we'll talk about. Somebody's telling you to buy an investment property. Well, if it's good enough for your money to put there, is it good enough for their money to put there? And that's a realistic question that any provider worth his salt is willing to answer and should say, yes, I own properties in this neighborhood also, and you can go to the public record and here's my company name. So again, it's all about separating the wheat from the chaff, if you will. Now, what are the most common pitfalls a foreign investor faces with U.S. investment property? Okay, first of all, you have to think about location. Am I buying in the right area? Have I seen the real estate itself? Have I visited the city I'm considering buying in? Or am I just taking a promoter's word for it? Number 2, rental efficacy. How quickly will the property rent? Does it have existing tenants now? If it does, you even have to be more careful, making sure that you're getting accurate lease history, accurate rent rolls, accurate deposit history, and verification of those deposits. It's so important because so many people will sell properties to unsuspecting investors, foreign investors especially, and the properties aren't rented, but they're advertised as being rented, and the promoter makes some rent payments, and that is kind of what my accountant and I affectionately call more of a Ponzi scheme. At Discount Property Warehouse, we certainly don't do that. All our properties, generally speaking, don't have tenants in them, and we do that for a variety of reasons, not the least of which is we don't ever want our investors to inherit a bad or non-existing tenant. So we kind of work with the investor and the management company to ensure that a qualified tenant is placed within 60 days of the property being closed. But that's a pitfall you have to watch out for. And then the third thing, and I notice this a lot, especially when I traveled in the Asian sphere, is exit strategy. Is the middleman or the reseller of the property offering an exit strategy that is realistic, or does it seem too good to be true? Example, I used to travel to the Asian sphere in several countries there. I was there. People would sell properties to these foreign nationals with the idea that in 2 or 3 years they'll be able to get refinanced by U.S. banks. And that's just not realistic. Americans right now are having a terrible time getting refinanced with U.S. banks. So for a foreign investor to try to get refinanced with no corporate history or basically no U.S. income, which is what banks use, there's no way. But I saw people selling properties this way, and you have to make sure that you're not being given an exit strategy. Another example would be is somebody saying that you can retail a house immediately. Example, you buy a house for $50,000 and they say it's worth $100. Can you realistically sell it for $100 at that point in time? Can you realistically find a buyer, a qualified buyer who can come through within a 90-day period to cash you out and realize that equity and turn it into profit for you? Or is just the appraisal on paper simply that? Not an accurate indicator of what's happening within the framework of the retail market. So you have to be really, really careful. The key to having success in real estate investing in the U.S. as a foreign national is to assess the integrity of the investment provider. These are questions that I would encourage every foreign investor to ask if they're thinking about buying in the United States. And you just need to be very direct with these people, because the caliber and integrity of their responses will give you the gut feeling of whether or not that's somebody who's qualified for you to be working with and, more importantly, investing your money with. Questions like, how many properties do you own in the area you're selling in? How long have you been selling real estate in the area you're promoting? Or, more importantly, how long have you owned real estate there? Are you a licensed real estate agent? Do you own a licensed real estate company? Have you ever been foreclosed on? What's your policy on customer satisfaction? Do you have references and media articles I could review? Have you been featured in the papers? Do you have a radio program? Do you have a television program? Do you have media exposure that consistently shows you in a positive light simply because of the process that you employ or the job you're doing or testimonials that you have? How many homes have you bought and sold in your lifetime? Those are critical questions that a person needs to ask. And a lot of us aren't used to taking hard lines with people. So, why are we asking this? Remember, a successful real estate investor has nothing to hide. Example, how many properties do you own in the area you're selling in? If the promoter's answer is, no, well, none, I don't own any property, or you need to run away as fast as you can. Because if the investments are good enough for you, they certainly should be better for the investor who is offering, or the promoter who is offering you these properties. And another question that I should have written down here is the promoter who's offering you property, are they actually real estate investors? Are they full-time professionals in the world of real estate? A second question is, have you ever been foreclosed on? Now, this isn't always the case. People fall on hard times and things happen. But not always, but as a general rule, if someone's losing houses in the market that they're offering them to you, you need to get away from that, because if they can't make them work, how can you make them work when they're marked up at a profit and sold to you? So you have to be careful of that. And this question I like a lot. How many homes have you bought and sold in your lifetime? The lower the number, you got to be wary. If somebody says I've bought and sold 10, 20 houses, a few dozen, well, in the overall realm of full-time real estate investors and staying power, staying capacity, that's a very low number. That would indicate a very inexperienced investor. I personally have bought and sold or consulted on over 1,000 homes. I think that number's probably closer to 1,200 today. I'm still learning every day. I don't know everything. But as a full-time investor, I can send people to the public record and say, look, I've bought and sold all these properties. Knock on wood, you can look. I've never had a foreclosure, etc., etc. And not that you necessarily are thinking of working with us at Discount Property Warehouse, but these are good questions for you to consider, entertain, and hold them to task. Now, every investment in real estate carries risk, even when it's done properly. A lot of new investors, they get so wrapped up in the idea of just passive income, making money. So part of this is to remind you of the fact that owning real estate has a variety of known unknowns, counterparty risks that you have to be prepared for. They will happen to you. You have to have a cash reserve to be prepared to deal with them beyond your initial investment. You need cash reserves. It's really important. You don't want to just, if you have $100,000 to invest in the market, you don't want to invest that $100,000. You want to invest like maybe 50 or 60% of it and just leave the rest in cash as a reserve if something else comes up or you have a problem or another good investment comes along. You don't want to tap yourself out. Problems that investors face, I would say this is worldwide, but specifically let's talk about the United States. Theft. It's a huge problem today. Copper theft, theft of mechanical equipment. That's air conditioning units and furnaces. In the depressed U.S. economy, it's like at an all-time high. Most thefts of AC units and furnaces are unreported. Because for most investors, if somebody steals a $1,500 air conditioning unit, they're simply not going to make an insurance claim, and you're never going to catch the guy or girl who stole the unit. Deterrents like cages that go around and secure units are ineffective. Even in luxury property areas, commercial properties, it's not uncommon these days that, in strip malls or other, commercial properties, that there's air conditioners that are stolen over the weekend, and $80,000, $90,000 losses. So you have to be prepared for that, and try to buy in as good of an area as possible. But understand that, this is a nationwide problem. It's not a problem in just the quote-unquote bad areas. Vacancy. Homes can go vacant. They will go vacant if you're owning rental property. When they do, as an investor, you face utility bills, lawn maintenance, placement fees, transitional costs. These are all a reality many new investors are unprepared to face. And then evictions. They can happen. They're going to happen if you own enough real estate. Tenants can stop paying but choose to remain in a home. Your city, make sure it's has landlord-friendly laws and leanings. And remember this, there's no hurry to buy, okay? The value-based U.S. investment housing market's not about to dry up. Cheesy used car sales tactics a lot of these promoters use is not really what you need. You need to learn to weed that out, etc. So here's 5 simple steps to make sure you're getting the information you need to look at the investment objectively, and then assess the integrity of the provider who's trying to offer you a quote-unquote investment opportunity. And 1, introduce yourself. Set up a time to ask your questions. Doing it over email is okay, but a phone conversation is really better. And ideally, you don't want to talk with a sales guy. You want to talk with the company owner, if possible, who should be, in theory, a full-time real estate investor. Obtain sample properties that have been sold to other clients. Obtain the contact information of those clients and then call them. Verify the accuracy of the story. A lot of people put up these fake testimonials, and for the life of me, I can't understand why people put up fake testimonials. It's really amazing. There was a financial analysis tool a few years ago that somebody brought to my attention, and it's really interesting because in this financial analysis tool they put up it's like a real estate analysis tool, and they put up testimonials by a guy who didn't exist. It was a fake guy. They made up a name and then used a picture of one of the people that was actually an investor in the financial analysis project. And it's that kind of duplicity, it's that kind of deception that you have to be careful of. So, it's important that you talk to investors who have invested with these providers. Ask them, do you have a financial interest in this company, etc., etc.? Because if they do, they might be more interested in giving you a good story. Example. And then number 3, ask for sample properties that are currently available. Get a pro forma. That's a schedule of expenses and income for the property. Review it. Ensure all expenses are accounted for. Taxes, insurance, management fee, condo fees, etc. Make sure you're using a worst case scenario. What's the lowest rent we can get here? Don't use the highest rent. Use the lowest rent. What if we can't get our taxes lowered? What if I'm getting a mortgage and it's, a 10% mortgage over 10 years? What will that payment be? If I'm getting private money, you need to ask these questions. Interview the management company. Very important. Make sure you feel comfortable with the services they provide. If not, ask for an alternative provider and make sure that you have one. And then lastly, interview the closing attorney or escrow company. Make sure you're getting full title insurance. Do not just get assigned a property. Never ever buy a property without title insurance. I cannot stress that to you enough. Additional questions you might want to think about is financing. Does the U.S. provider offer non-qualifying financing for foreign nationals? Try to find somebody who does. That'll help you stretch your purchasing dollars much farther. Number 2, can you help me with LLC formation? A reliable provider has licensed inexpensive professionals to help with legal formation of entities. And then thirdly, what about my tax responsibility with the IRS? An honest provider generally has CPAs who can help you file your annual returns easily and with minimal hassle and expense. Be careful. You have to be careful. Evaluate independently these providers. Go with your gut instinct. If something seems to be too good to be true, it probably is. There's no get-rich-quick schemes with rental property. It's a marathon. It's a long-distance run over time. It's not a sprint. It doesn't work that way. And remember this, most people selling real estate are not financially independent from the investments they are offering you. So do your due diligence. There's great deals to be bought out there in the United States right now. Millionaires are going to be made, but you have to find the right team. And something else you should think about is when you're working with a middleman, for example, say I'm in the United Kingdom and I use a United Kingdom company to buy properties in Memphis, Tennessee, which is a city in the United States that probably has some of the top yields right now for investment property cash flow. Price per square meter is very low. Rent per square meter is very high. It's really a great place to buy investment property right now. And you use a company in the UK to buy property. Remember, you're going to pay a markup to that UK company who's using a company in Memphis. So why not just get with a provider in Memphis and evaluate them? That way you're not paying a markup and you can work directly with individuals who live in the area that you're thinking about buying. Now, a lot of people get caught up in these slick presentations, but the truth of the matter is, with the advent of the internet, it's really not hard to find good quality providers. So with that being said, I want to thank you for joining me on this short synopsis of some questions and hard-hitting ideas that you need to think about as a foreign investor wanting to buy property in the United States. It is a great time to buy right now. Owning an investment rental property and paying it off quickly is the way to go. And of course, our licensed real estate company is always available to serve you. You can go to discountpropertywarehouse.com, discountpropertywarehouse.net. If you're interested in using private financing, the shorttermretirement.com is a program I designed and trademarked for foreign investors to buy property in the United States. And you can catch my radio program, Pieces of the Puzzle: Journeys in Creative Real Estate Investing, every Saturday from 12 to 2 on News Talk FM 98.9 or on the iHeartRadio app. Again, I'm here to serve you. My entire staff and team are. We love owning real estate. We are full-time investors. And if you're thinking about buying U.S. real estate, give this little video review a look over. Make sure you're writing down your notes and questions. Ask these people the hard-hitting questions, and you'll be surprised at what you find out. Thanks so much for joining us. Take it easy.